Good morning. It is Tuesday, May 26th, the day after Memorial Day. I hope everybody got outside this weekend. The weather was good in Wisconsin, at least where I am. And maybe you got to grill out. Maybe you got to have cocktails 6 feet away from somebody. Hopefully you did something emotionally and psychologically and physically healthy. So we're going to take a look at what we have been tracking now for a few weeks, which was where would the stock market top? Was it going to top in that 294, 95 region on the S&P 500? Or would it shoot up to the big round number and then go just a little bit past it? And I want to show you something that I think is pretty interesting. So when you measure Fibonacci ratios, you usually go from a high to a low, low to a high, and then you can shorten up your time frames. So there's, just like an Elliott wave where you have waves within waves, you can measure from the very long duration, then other durations within. And this is a weekly chart just because I want to show everything. I'm going to erase this chart. This is the low 2016 to the high recently. If I pull this out, look, watch the lines that disappear. All right. So now those lines disappear. And we're keying off the longest time duration, which is the Trump election at this point. So a lot of these lines on the left are from the Trump election. Then I do some measures from the 2018 corrections. Okay. Which seem to be the important events, the volatility event and the end of the year sell-off, which should be about there. This one, yeah, they're even, so that's good. Take a look where these corrections are going to. These are lines based off the election now, not the longer term time frame. So the relevant time durations seem to be consistent with measuring from the election, not the absolute low earlier that year. Let's take a look at where the big resistance lies and then what we're likely to hit. So if we stop at 301, watch the line that pops back in there. 301 is the lower time, is that red checked mark line. That's here. If we get rid of it, oh, that's the one. Here's your red check mark. That's the long duration. So if we blow through that, that means we're going up to this line, which is more, it has to do with the Trump election. It's about 307 on the SPY. And then there's some other overlapping retracement lines right above it. So this would seem to be a pretty interesting ceiling on the market right about here. Let's give that a different color. If it's resistance, what color do we want to give it? What is a good resistance color? Purple? We'll make purple resistance. About that purple. That purple? That purple. That's less blue. We'll go with that purple. So that seems to be a pretty strong resistance line. We'll see. If we blow through this level, then it's off to the races to maybe challenge the highs, or at least get close. So interesting to me that the corrections and the retracements seem to be based on Fibonacci lines that go back to the Trump election, but not before that. Could be a lot of reasons for that. One, the market might have just decided that that's a new cycle. There could be underlying political things, but for whatever reason, those seem to be the trend lines the market is using. Like I said, if we get rid of this, we stretch this out, we switch over here to the daily chart so it's cleaned up a little bit. Make it the whole thing. Pull it over a little. So flew through these 294.95 levels, which have fought with for a few days. It's heading up here. So unless it stops pretty quickly, like the next point, then it's the cyclical Trump election where all this stuff hits ahead. So I think this is just really interesting. The confluence here, that these are all based on post-Trump election Fibonacci numbers. And then this is just based off a low that happened a year or so before that. So we'll see where this goes. But I suspect we are now going to get into this zone, which is another 3% up. And if it keeps going, big rally from here to here. And that's about 8 or 9%. So this is another argument for going slow on your trading and to scale in and scale out rather than saying, oh, this is a spot. I keep trying to emphasize that point over and over again. It's about scaling in and scaling out. So we will see. This seems, man, it's right on schedule with this Fibonacci stuff. But like I said, I don't use the time frames very often. But wouldn't that be something if on Thursday it was right here? And then the market has to make a decision. And this is where we want to look at money flow. So the daily money flow, and I have changed these measurement periods back to where they were. So RSI and MFI both on 14 days again, 14 time periods again. So for your daily, it's days. If your weeks, it's weeks. If it's minutes, it's minutes. So whatever chart you're using up here, it'll measure 14 time periods. The Chaikin 20 is the one that he uses, 20 days generally. And that is consistent with the original turtle traders that we've talked about in the past and I haven't brought up lately. But the original trend traders were using 20-day periods. So that was their big indicator. If you had 4 weeks of a trend in money flow, that basically was going to tell you exactly where the price was going to, or tell you what direction the price was going to go. So let's take a look at these individually. So not quite to oversold, overbought. Has to get up here. And a weird negative divergence, right? So the money flow, which is based on volume, which has volume in it, is basically saying, look, this rally is getting less strong because there's less volume. So there's fewer buyers, even though the market's going up. Jumped a little bit recently, but not much. Still a downward trend. And Chaikin also has a negative divergence. These usually mean change in price direction. MACD, Option Girl, are you on here right now? This seems to be pretty ambivalent. I mean, could it pull this up? It could over the next several days. And it looks like it will, at least for a day or two. But it's pretty high already. And certainly is at that point where it would turn over. So we want to watch MACD in the next couple of days. We go back to the weekly chart. Get rid of this time series. If I can figure out how to get rid of it. Yeah. So I get rid of the time sequences. I kept some of them. Let's get rid of these too. I think the time functions, like I said, I think they're questionable. So just look at the way that I had this drawn and where it's headed to. I mean, that's almost freaking perfect. It really seems like the Trump election cycle is what this is all based off of. We'll see. I mean, look where the correction went. This is based off the Trump election cycle. It hit right there. I mean, that's pretty interesting. And this represented almost a complete wipeout, right? So this red line here would wipe out the Trump rally. At this point, imagine if that happens. And that's a pretty good correction. So we'll see what the market does. What have we talked about being the main thing that will drive people selling? What's the main thing that will drive people selling? What will happen to them? We force them to sell. It's an important question. You need to know this. What drives mass selling? Unemployment. That's right. And unemployment's super high. So at what point do people start to sell their 401ks? Right? When does that happen? We talked about this on Friday. The PPP program, companies are starting to apply for loan forgiveness. Governor Cuomo was actually on yesterday, and he said, look, this isn't going to turn around quickly. We're already hearing that companies are going to, start laying people off once they get their loan forgiveness. I mean, I've been telling you that. So these companies are going to adjust for the current aggregate demand, not the aggregate demand from a year ago. And if you're driving around here and there and you're looking around, you're seeing people out, but these roads are nowhere near as busy as they were a year ago. Not even close. I mean, it's noticeable. I went to a garden center, I went to some hardware stores, went to the grocery store, and I'm looking around, and the grocery store is the only one that seems busy, but a lot of us are still just picking up in the parking lot. That's what I'm doing now. Been doing that for a month. So we've been seeing that in 18 states now, the infection and death rates are ticking back up. I would expect that'll be more states soon. And that will continue to press down on consumer confidence, which we know has been heading down. And as people feel more financial strain, they'll get to the point where, a lot of people are doing their own personal austerity, right? They're unsure about their jobs coming back, and so they're not spending a lot of money. And that is across the economy. Lots of people not spending as much as they normally do. I've given you my example. I mean, I just spent the last couple of bucks because I got the dogs groomed that I had brought to spring training in March. So what I expected to spend in 10 days in March ended up taking me 9 weeks, 10 weeks, whatever that was. And there's a lot of that going on. So if demand is what causes producers to produce and provide services, and we know that demand is low because consumer confidence is low, you have that, reinforcing downward cycle. Interestingly, the market is starting to turn down just a little bit in the last couple minutes. We'll see if that means anything. It could just be a little consolidation before it keeps going up. If I had to guess, I'd say that it hits up here on this red line, because that's the longer line. And right at about 307, 308, 307.25 is what it's saying here, but I could be off by a couple nickels and dimes just because of where I put the line. But 307, 308, 309, if it goes through that means something good's going on as far as the economy, or there's just so much goddamn money that we're going to push it up another set of levels. This is a big jump. I mean, there's nothing in here. It's just air. So if it goes through, it's probably going to rally hard and fast. We'll see what happens. But this line here is not based on Trump, really. This is it. This is right. This is the key area right here. Either turns back down or it goes through this, and we'll see. There's not an economic reason for us to rally. There's no economic reason for it. The economy has stopped getting worse, but as we talked about, reopening doesn't mean open. So we have to be just real careful here. I think your last scaling out, getting down to only about 25% equities, or if you're going to do covered calls like I did, about 50% equities with a whole bunch of covered calls, long dated, that should be your mission the next couple of days. I haven't added to any of my short positions. I only have 3% in puts right now, but that'll jump up to 5% right up here. So I'm going to keep buying the August 295 SPY puts because I already have them, and I'll just average down into those. So my limit order is at $10 right now. I bought the first batch at 15, and we'll see. So if it gets up to here and turns down, then you have air here. That'll be the shocker. This will be the one that wakes people up that there's still danger. And then it can doom into this range, and pretty easy to go boom down into here. And then does it hit the last air pockets in here before it hits pretty strong support again. So we'll see. I think we get to this yellow line. I really do think we see around 240 on the S&P 500. Then does it get down into this area? Is there bad enough news to blow through those air pockets and get down into this area? We'll find out. I truly hope not. I'd rather be wrong and just adjust my strategy. But, we'll find out. I don't even know what this line is. Oh, that was my timeline, wasn't it? What was that? You know what that is. Let's find out. I have that twice. I already have that line. I don't know what all that was. Where did I get that from? that's what this is. It's this one. That looked like a random line. Okay. Yeah, I don't even know if I want to use these pre-Trump numbers. I mean, we'll leave them in there just in case. Do you all know what tomorrow is? You don't, do you? Tomorrow. There you go. Tomorrow, Eminem is giving a concert on Spotify. So you'll know where I'm going to be. I would think Fireman Jim would like that. I don't know if I see him on here. He might be working today. Where's No Crying? No Crying's not on. Ooh. All right. So IWM, look at that. It's right where I said it would get to. Let's see if it turns down. This is a 4-hour chart. RSI is peaking out. MFI is almost there. Shaking money flow is starting to turn down. Negative divergence. And here, let's change these. Make them match again. Negative divergence on shaken. He's measuring the highs and the lows on the day. And how the market finishes at the end of the day. This is volume weighted RSI, overbought. On the 4-hour chart, RSI, overbought on the 4-hour chart. So this basically indicates that we've probably hit the high for the day. So let's take a look at the daily chart. RSI not quite overbought. Another day or two. Another day or two of rally and it's overbought. Money flow index, volume weighted. Yeah, see, the volume story is interesting, right? Volume is saying, look, fewer participants chasing this money, chasing this rally. Fewer people chasing the rally. Shaking money flow, right? Still positive. It looks like, unless it sets a new trend here, right? Unless it jitterbugs up, looks like it might be getting ready to, right? Because this is downward trend, retrace, downward trend would be normal. But if this is a reversal, then it'll go boom, boom, back up. It looks like it's turning over. The next couple of days, we'll know. So, question you should ask yourself is, from here to here, something I want to chase? Well, your answer is, who gives a shit what you want? If it breaks out just a couple points above this and holds it, then yeah, then buy a couple calls or just buy a couple stocks that you or QQQ, and then just ride it up for 79%, and then sell it again. That's what you're doing if you're a swing trader. If it breaks through this area, right, especially if it's not super overbought, then go ahead and ride it for a little while. I don't think it's going to go through here. This is the area that I've been talking about for a month. This is the one that I've always said we can get to this. Don't know if we will, but this is the spot we can get to. So we shall see. And it really seems to me that we're keying off the Trump election, not the low point. So the low point in February 2016, those aren't the lines that we keep hitting. We keep hitting lines that are based on the low that hit right, the little mini low, and then the Trump election, and then everything seems to be keying off of from here to here. So interesting. Okay, let's go over to gold. Pretty good support here. This 382 fib. There's a little bit of confluence. But even right here, there's a little confluence. I think I would like to sell GLD puts as soon as we get under 160. I'll probably sell 155s or 150s, or maybe a little bit of both. I was reading a report on gold, and there's really been no major gold finds in the last 3 years, which is pretty amazing to me. And the reason I've liked Newmont is because they're the biggest, and I think that they cleaned up the best, and they're in the S&P 500. So the reasons, I think between GLD, GDX, and Newmont, I think that if we get a small pullback in gold, you start nibbling back in on those, right? And if we get a really good pullback, because there's just general market, the market just gets generally upset, you're definitely going to want to buy in this area. And again, what you're going to look for, and I have to keep adjusting these because I haven't done it yet. 20 periods is normal. Oh, excuse me, I'm sorry. Did I screw that up? I think I screwed it up on the other one too. 14 periods. That's what makes it match RSI. That's what makes it useful against RSI. I was comparing the two money flows before. I'm not even positive that's all that important. There we go. So, but RSI and MFI are similar, so now you get a good comparison there, right? Market in the middle. If it gets down in here, you probably are a buyer. Market in the middle. I mean, there's nothing definitive here, but it gets down in this area, I think you're a buyer. I mean, look how doesn't get down, it hasn't been oversold in a long time, but it gets down in here, 35-ish. Shaking money flow, peaked, just having a little correction retracement, probably right in here you're a buyer, just as it gets into negative. Doesn't seem to stay down there very long. All right, we'll do about 15 minutes of question and answer. And somebody asked about silver miners. I wouldn't buy silver miners as pure plays. Stick with GDX as far as I'm concerned. There's plenty of silver in there. There's no shortage of silver like there is of gold. So I don't know that silver is all that important, especially not until there's a industrial recovery, right? Because silver has industrial uses. So I don't think that silver is going to close that gap with gold, and if it does, it'll be temporary. Gold is the place to be. There's a shortage of gold. There's huge demand. We're going to keep seeing money printing, so people are going to want to have some safe haven. So until there's more of a normalization of the economy, and if we have to bail out retirement systems, too, someday soon, when is that normalization? I don't know. Is it a few years from now, or is it a decade from now? I mean, in my opinion, we should deal with the retirement system now. I mean, I would like to just see everything happen at once. Fix it, pass a couple laws that talk about having nearly balanced budgets once we do the normalization, and we devalue debt. because you don't want it to happen again in 10 or 20 years. So you pass laws, and you write in law, hey, this isn't going to be all that important for a while, but don't ignore this law in 10 or 20 years when it matters again. So we'll see what happens here, but clearly a definitive trend up in gold, right? So it's definitely in that buy the dip area. And this line right here, I mean, just a little under 150. I mean, you pretty much should be a big time buyer in here. And if it would happen to get into the 130s, just because that's what markets do, go ahead and load up. Because the only other thing that this could mean if it gets down here is that there's a complete utter breakdown gold, which would blow my mind because there's no fundamental reason supporting that. But sure, could it get down to the 120s? It could. My guess is it gets to around 150-ish, and then it resumes the uptrend, because this looks like this is gonna be another leg up. But somewhere between upper 130s and 150-ish. That's where I'd be buying it. So what kind of questions do folks have? BBL. Yeah. Take a look at the weekly. Yeah, it was probably a buy the dip stock if you want the company. I don't know enough about their operations anymore to know if I love this. Newmont is the best company out there for miners. They just are. Hands down, Newmont's the best company out there for gold miners. When you take a look at copper, you probably want Freeport-McMoRan. So, you can overlay FCX, right? Which one are you getting more value on? I think I'd probably, if I believed in an industrial turnaround was within a year, and I don't think it's 2 years. I think a big time industrial turnaround is like end the next year starts after whatever stimulus. Freeport-McMoRan is the one that I probably look at for copper. I mean, they're the big player in copper. And Australia is going to need income because their coal business is dying quickly. So, any other companies you guys want to look at? Ladies and gentlemen. We can throw in some pretty lines. Right. This one is the important one. So that's actually an important level. So BHP is sitting at a pretty important level right now. So you'd expect a pullback to around $25 a share. At around $25 a share, I think that's where I'd probably look at BHP. We can do the extension as well. Yeah, around $25 a share. It's probably where you have some big buying opportunities. These are all pretty clean. If you take a look at the really long term, it's hard to use that. So you probably use that. It's that one. Then if you want to do the retrace, I hope you've all looked this stuff up and watched the video so you have a cursory knowledge of what we're doing here. Go up here, get those matched, and then do the retrace. Interesting, right? Again, right, some confluence there, right around 25. We can do super long cycle. Go from here again. At the top. Oh, we already did that. We don't need that one. That's not the one we need. We need the retrace. So do the retrace from here. That's the top. And then to the new bottom. Again, you know, right around 23, 24, 25, you're probably a buyer. Doesn't look like it'll get sub 20 again unless we had that Armageddon scenario, right? So yeah, middle 20s is where I think I'd probably look at BHP. Once it gets through here, it's a big drop. And the other price looks like, I mean, this 31-ish price, I guess, could be a place to start selling puts or nibbling, just in case it holds. But look at all the lines that kind of pile up right around 25-ish. That's probably what I'd be looking for because I want the deeper value. Let me save this. Power. Yeah, we haven't played with this chart in a while, have we? Clearly, it's long-term bottom. Doesn't look like there's a whole lot of yeah, this area right here. I mean, unless something really bad happens, seems to be pretty good floor there, right? Try another retrace. So let's go to this low here. All right. Yeah, look at all those lines right in this area, right around 7-ish. I think you can pretty assertively sell I think you can pretty assertively sell cash secured puts at the money, you know, strike price, like $7 puts. If you really want to expand a long position, sell $7 puts on SunPower that are kind of long dated, I'd say 3 or 4 months before the election, right? Before the election, if you don't want it put to you, after the election, if you do, right? You've seen the newer polls coming out. They're saying exactly what I've been telling you, is that Democrats look like they're going to win in a landslide now. Not just win, but win in a landslide. You know, they'd have to screw things up, right? They'd have to snatch defeat from the jaws of victory. They've pulled it off before, so we'll see. All right. So SunPower, save that. Hopefully that's saved. So I don't like any of these REITs. I think the residential are interesting. Took a look at Camden over the weekend. I haven't looked at this one lately. But office REITs, I think, are in trouble. I think that I just think you're going to see a lot of retrenchment, right? I think industrial REITs are better. I think that healthcare REITs are pretty good, you know, and residential, but you know, how many hits do residential get in the short run? So is there a leg down on residential? Hard to know. I think probably, because you know, Camden deferred a lot of rents, and you know, they're probably gonna have to do more. There's no argument for the economy getting better. Nothing credible. Unless there's a miracle cure. And you know, I know everybody wants there to be a miracle cure, but I tell you what, I keep looking at all this data, and it's not as good as you think. And why did all those Moderna executives sell all that stock right after they raised money, right? So I'm gradually putting these URLs into the VSL spreadsheet. So like, I'll save it. Yeah, you know, I think this is the new reality. Right around 52-ish is 53-ish, 52, 50, yeah, 50, 52-ish. If you believe in Realty Income's business model, then 52-ish is a spot to buy. If you're not so sure, then you have to ask yourself the question, can it go below here? Right? It's been there before. Not that long ago. Right? And I think that you know, there's, look where this line ends up. It is naive to think that this, where it was resistance, right? Resistance, finally goes through and it becomes support. It is naive to think that Realty Income can't go down into the middle 30s. I'm not saying that it will. I don't know enough about the business to know that, but it's naive to think that it can't get down to the middle 30s. So again, let's take our Trump theory. The market is keying off the Trump election. We'll go to October, November. So there was a local low right here at the election. And look at that. Look where that line ends up. Pretty amazing, huh? How did that Fibonacci level end up right here where I drew that green line a second ago? So it is not you know, it's just not far-fetched that Realty Income can get into the middle 30s. Not saying that it will, just saying that it's clearly something that could happen. All right. ARC. Yeah, again, this has a lot to do with Tesla. So this ended up going up here, set a new high. I'll move this over to what's the option expiration in July 17th. Again, I just think that the option expirations are more important than fibs on time frames. mean, you get some confluence there, but yeah, you know, it's important to throw Tesla on top of here, right? Tesla just pulls this thing. So how well she trades Tesla has a lot to do with how well ARK Innovation Fund does. So, you know, Tesla's way up there. It comes down. This is going to get beat up. Yeah, I'd have a hard time. I would have a hard time buying this above 40. I really would. I'd have a hard time buying ARK above 40. I think that's probably. Oops, that's what I want this solid line, not as big, right? Trying to make these solid now. I mean, these lines really respect structure here. So if we throw in some fibbies, this low to this high, we'll do a retrace or extension, excuse me, extension. There. To the low, which is wow. I hit right on the fib. All right. So this one's playing right on the fibs. Broke through this time. Is there anything above there? Look at all those on 41. You can move that up. I'll take the hot. Oops. I'll go to the high side. How's that? Pretty big support right there. 41-ish. All right, 41. I'd probably be a buyer at 41. I don't want it way up here. So that implies a pretty big drop. But again, remember, it's tied to Tesla. Who's buying a Tesla this year without a tax break if they're unemployed? Raise your hand. Right? And FAMES. Legalized crooks. Where have you been? Man, these lines are just from looking at the market structure, right? I mean, this is just eyeballing it. All right, so let's look at the daily. Yeah, this is a hard chart to use, right? Because it's just so vertical. Let's take this line, go to that line. Let's double kissing right now. Let's do an extension again from here. Back down. Two ways to do that. Back down to where it was. Then use the new levels. I'm completely ignoring so if you're really being risk averse, about 50-51. Really being risk averse. I mean, come on. Is it really going to get back into the 20s? I don't want it to. I don't want to say that it's going to. That's a pretty good floor right there, isn't it? All those levels right there. Kind of could just go through these. Ding, 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 like Plinko. Bloom, 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 bloom. Then it hits an air pocket. I'm going to say that it has a hard time getting through this spot. That peak right there. So 51 and 34. And the Armageddon scenario here. A little under 20. So we'll save that. Do that. Pull up. I changed the tabs a little bit so that you didn't have to scroll so often. Where do I have end phase? Small or large? Mid. There you go. So I'm gradually adding these. Oh, oops, I'm supposed to put it on the master list. Dumas. There we go. So that's where you find these. Like I said, I gradually get them in there. You can build your own. It's allowed. And they're all shareable, so you can just copy them. End phase, TAN. Yeah, I think, yeah, the Democrats are real good for TAN. I mean, look at these rallies. These rallies are just pretty amazing to me. They don't make any economic sense. Zero economic sense. Sometimes the market just doesn't care. The market can remain irrational longer than you can remain solvent. Which is why the small scaling in at multiple levels, we'll go all the way back to home base, is so important. Small position sizes. There. So where is their big support? Oh. There you go. Oh, come on, knucklehead. There we go. 23-ish for TAN. Awfully good pullback. And about 18-ish here. Do we know that we'll see those levels? No, but take a look at starting to hit more resistance in this zone. Just like all the other charts, more resistance right above head. So if it reverses, come down to this level, 32-ish, just below where we are now, and then gap, and then dink, dink, a little bit of a gap, then a big gap. That would be one of those blow-off things. So, you could put in a second resistance line here, or, excuse me, support line. Right about there, right? That is another spot where if you were more aggressive, right, depending on your risk tolerance, you could start buying right around 27th on solar ETF as well, right? That's, you're respecting some market structure here, and it's a fib level, right? Notice how the market structure where the peaks happen to be at fib levels quite often. Why does that happen? I don't know. It just does over and over and over again. At this point, it could be reinforcing, right? So many people are using this, therefore it's reinforcing, right? So, 27-ish, I'd probably for sure be selling puts. And then 23-ish, I'd probably for sure be buying. And I'd be backing up the truck if it got under 20. All right. So here, we'll save this one. And we will put it right into the charts, ETF. Oh, did I do it again? Dang it. Wait, the ETFs are their own thing. Okay, so I did that right. So ETFs go right there. All right. We have an updated SPY chart. We'll use that's gross. What do we want to eliminate from this? What lines do we think don't matter? I'm not so convinced I want this time stuff in here anymore. What do you think? You guys even find the time stuff useful? I don't think that I do. I'm going to keep that one just because look how it matches up. Okay, we'll keep that. And I do actually prefer the weekly chart for this. Man, that just gets ugly, doesn't it? Let's do 2 of these. Back to the daily. All right, because you can copy these, just play with them yourself then, change time frames, things like that. So let's do QQQ, seeing as that's the one we actually want to buy. Just get rid of the LEO waves. Like I said, as long as you understand that there's going to be some rhythm, especially in the middle parts of the market, doesn't matter too much. Okay, let's go back to election. Peak. Election. to peak to back. Then we'll do another extension that represents the corrections. So this one. Then the big one. Peak correction. So what do we believe about this? That is probably reasonable. Right? That's probably about as bad as it can get. Then where is the real bottom fishing here? Looks like about there. That little jitterbug there. A little bit of confluence. And you tell me. There's just no strength in there at all. There's nothing in there that tells me that it couldn't keep going down once it starts going down. You know, you got some confluence right there. It kind of respects market structure there too, doesn't it? All right, so who thinks Elton John is gonna join Eminem tomorrow night? Man, this could go all the way down here. You know, let's put another line. I think people are becoming resistant to the idea that there's a lot of risk right now. I think that is to their own detriment. Other thing to remember is if you've pretty much already won in the game of life, why have a lot at risk until you know that there's a really good opportunity, right? Big fib levels with some confluence of some retracements and some extensions. Boom, boom, boom. All right, let's take a look at that. How's that? Weekly charts be in that column. Change it to a daily now. Well, that worked out. There you go. All right. Anything else? Looks like that was all of them. All right. You know, let's take a look at GDX real quick. You know, that's stupid, right? So, man, really broke through there good. Yeah, this comes down to about 31. I think you buy it because I think the breakout is real. I think that the shortage in gold is really going to support these guys. I don't think we get that super low level again. So if you sold some covered calls on this, you get a chance to buy your covered calls back for about what you sold them for, that's probably what you're trying to do. I think this is becoming clear to me. If we get a chance to buy below 31, we should probably do it. So this 27-ish though, that's extensions and retracements. So this is really good buying price right here, right around 27. Where is it? There we go. And let's take a look at that. Let's just change it to daily real quick. All right, there you go. So yeah, I think somewhere between 31-ish and 27-ish, buying back your calls if you sold them, or buying GDX if you don't have enough of it. And again, I wouldn't go past 15%. And also in many accounts, I'm using GDX as a substitute for bonds because I think that the correlation for diversification is about the same, and there's more upside to GDX than there is to the bonds. So similar diversification characteristics, but more upside to the gold stocks than the bonds, right? It's clearly more volatility, but let's overlay LQD here. That was a pretty big drop here too. The Fed doesn't come into the rescue, right? It doesn't come back, and that's what I was telling you about it. And the other thing with GDX is when the Federal Reserve bails out the bond market, it's basically putting more fuel to the gold fire too, right? So why, similar diversification, I showed you the correlation charts. Why not have this for, I don't know why anybody would have a 60-40 portfolio anymore. 60-20-20, I get that, right? Give or take. But 40% in bonds, that nobody in the world should have 40% of their money in bonds. There's no excuse for it. So let's save this. That in the daily. Oh, maybe I already did it. Okay. All right, call it a day. I will post this. And remember to play at 1.25. All right, have a good day.